Welcome back, everyone. My name is Adam, Rusmin,
Hello.
Victor.
Hi everyone.
Thanks for joining us today. We're going to do a pretty popular topic, which is about S&P 500 ETFs.
Yeah.
Yep.
And ETFs are something that a lot of viewers around have interest in. But we're going to do a very particular topic about which one is the cheapest S&P 500 ETF you can buy. So I think when it comes to ETFs, you typically want to go for the cheapest ones. So we had a look. I'm going to do a little bit of research and find out what is the cheapest ETFs you have out in the market, specifically for the S&P 500 because it's a very popular index. All right. So very quick introduction. We're looking for specific ETFs for the S&P 500, which is they're Irish-domiciled.
Yeah.
Because of the tax considerations, maybe you can talk about that about that later on. And they're going to be accumulating ETFs. Yeah.
Yep.
All right, so I want to go. Let's go.
I think to explain accumulating, it means that they reinvest the dividends for you
Automatically.
Right.
Yeah.
The normal SPY they do distributing, which they give the dividend on a quarterly basis.
Okay. Put things into context. The reason why people look at S&P 500 is because they represent the 500 largest company in the US. So if you're an investor, if you want to have exposure in the US market, S&P actually it will give you that kind of exposure, all right, especially focused on companies that are listed in the US. And they have about 500 over holdings, right? And top 10 constituents is about 36% of the portfolio, right? And once you invest, let's say in the S&P 500, you can't invest in the index, right? You can only invest in those ETF that index after the S&P 500. And that will gives you the instant diversification into 500 holdings. And then, of course, in terms of sector diversification, you have like infotech, the financial, consumer, discrete, communication, healthcare, blah, blah, blah. Okay. So it's very diversified. So technically, if you look at top 10 alone, you have your max 7, right? So those are the leading company in the US. They're coming up with a lot of innovation, and so there are a lot of ETF actually indexed after the S&P 500, right? The most popular that I think you all have heard in the market would be SPY, SPY, right? That's the oldest, one of the oldest ETF around. But we're not going to cover SPY today because SPY, I mean, they have came around a long time, and I think their fees is still relatively on the higher side. Okay, so over the last 10 years or 15 years, I think we've seen ETF product that are coming to the market, and those ETF that are domiciled in the US, I think we have like top 2. We're actually going to focus on the top 2 or top 3, right? There are a lot of products. Okay, like I said, there are many ETF that mimic S&P 500 ETF. Okay, of course, nowadays you have the top 2 or top 3. You have like Vanguard S&P 500 ETF VOO. Right, and that expense ratio comes in about 0.03%, and that's one of the largest in terms of the ETF, in terms of the asset under management, right? And they have a similar holding as S&P 500, and the top 10 is also quite similar, right? But this ETF is distributing in nature, right? So whatever dividends that you receive, you get taxed 30% as a foreign investors, right? And of course, it's a physical replication, which means that they really own that ETFs. The ETF is that we really own those companies in the S&P 500. Okay, so the other one, which is very similar in terms of expense ratio, is iShare Core S&P 500 ETF, IVV, all right? And of course, that's quite similar, right? If you want something that is even cheaper for US-domiciled ETF, which usually more suitable for American investors, not so much for foreign investors, is actually SPLG, all right? The cost, the total expense ratio comes in at about 0.02%. Okay, So the difference in terms of fees actually is not that much anymore.
Because, but just to give you some context, the SPY, which is the biggest ETF around for the S&P 500, the expense ratio is 0.09%.
945%.
945, to be specific. So this one is at 0.03 and 0.02%. Yeah, so it's a lot cheaper. And if there's really no difference between the products or the underlying securities.
They don't kill it because it's a product that has amassed so much AUM. So they came out with a new one. Same thing, exact same thing.
To get more AUM?
To get more AUM. And also people, nowadays, investors are more savvy. They want cheaper expense ratio, right? So they get better performance. So this SPLG, they come in at about 0.02%. It's essentially to kill that SPY.
It's by State Street as well, right?
Yes.
So it's but the reason why people still like SPY is because it's the most liquid ETF out there, and you have an option strategy that goes along with your index investing.
Correct.
A lot of options contracts, options chain is available for that one, which may not be the same for the smaller ETFs. So it really depends on what you're looking at. But it's a lot cheaper.
Correct. So that's for, I think, most American investors. If you're American watching this, I think that will be probably the best option they can go to.
Okay.
All right. But for foreign investors like us, I think we are based in Singapore. Right. So I think we usually prefer to look at Irish-based US-domiciled ETF. Largely because first the withholding tax for Irish-based domicile ETF, I think you are looking at about 15% versus 30%, right? If you are buying the US counterpart, right? So Irish domicile is more tax efficient, and on top of that, I think the estate tax should come in at about 0%.
Yes.
Okay?
There's no estate tax.
Yeah. So in the US, if you buy the US ETF, there's an estate tax. There's an exception up to I think $60,000.
Yes, the
right?
first 60,000.
If your AUM in the US market is less than 60,000, the time when you pass away or whoever passed away, someone passed away, not you. Okay, you will be exempted from tax. But anything beyond that, you can get tax up to 40%.
Yeah.
Yep.
That is a problem. But I think for most people who invest in the market, your AUM will probably grow beyond 60,000.
You should. Otherwise,
What's the
you're
point of
not doing so
investing?
well, right?
Yeah. For maybe if you just starting up, you may not see
It's
that as an
okay.
important
Yeah,
thing. But
yeah.
eventually, as you save up, you invest, the money grow, right? That you hit that point. Okay. So that's why Irish-based domicile is become very popular and a good alternative for foreign investors who want to have exposure in the US market, right? So if you look at the top 3 or even top 4 S&P 500 ETFs that are based in Ireland, all right, you have the most popular one actually is a CSPX. Right? I think you probably have heard us talking about CSPX or someone else, right? And that's this one. I think right now the AUM size is about 120 billions, and the expense ratio comes in at about 0.07%, which is very efficient. Okay, I mean if you compare to a typical mutual fund, your fees is about 1%. Right,
Yeah.
that is the usual benchmark that you will see. But for ETF, that's why they are very popular, because the expense ratio is only coming at 0.07%, and this is accumulating in nature. So which means that any dividends that pay out by those ETF holdings, the companies, right, you will be reinvested.
Yeah, and just to point out, even though it's accumulating, you still are taxed at 15%.
Yes.
Yep.
So some people actually ask, so if it's accumulating, do I actually get the 15% tax? It is post-tax, and then that's reinvested automatically.
Correct.
Yeah.
So this is good point. All right. And then of course you have another Vanguard S&P 500 UC ETF, very similar to CSPX in terms of fee structure. AUM size is half of it. Right. This is another alternative. I mean, a lot of people like Vanguard because they really offer very low fees, right? But of course with ETF, you always have new product coming to the market. And I think the other one that you can look at is actually Invesco S&P 500 UCITS ETF. Ticker symbol is SPXX. Okay, SXS.
Yeah,
okay.
XS. Yeah.
I think I need to point this out first.
Yeah.
Because a lot of time when you search SPXS, right, it will give you the New York one. This one we are talking about is the one that listed in
London.
London Stock Exchange.
Exchange.
The one in New York is S&P 500 3 times bear. So don't buy the wrong one. Don't look at the wrong one.
Totally different products, huh?
Yeah, totally different.
Yeah. So this one, the fees come in slightly lower at 0.05%. AUM is also, I think, 1/3 of the CSPX, right? But you have to know that this is actually synthetic ETF. Yeah. So the synthetic ETF, they don't own the physical stocks in the ETF itself.
And someone could be asking, why would I pick a synthetic ETF?
Yeah.
Right. And there's a few reasons why. Number one, when you use a synthetic ETF, you're using swaps to basically mimic the index almost perfectly or perfectly.
Yeah.
Because in real life, when you're buying and selling the physical shares, the stocks, it's going to be slippage involved and everything. It's very hard to track the index exactly. But even though they do it very well. But with synthetics, because it's basically a synthetic, you can do contracts and swaps in a way that basically gives you the exact return, including the dividends. You can track the index almost perfectly, and some people like that. But the biggest reason why some people actually like synthetics, or why they would choose synthetics, is because there's no tax. So technically, you're not paying a dividend, because the return is mimicked using a swap. There's no actual dividend being paid, so you avoid the 15% or 30%, whatever dividend withholding tax there is. It's just not there.
Unless US government come in and change the
Unless
rule.
they change the rule. But technically, there is no dividend. There's no tax for that. So some people actually prefer that.
Actually, if you look at the AUM size, 43 billion, which means that I think it's kind of like very popular nowadays, right? People are comfortable with owning this Invesco S&P 500 UCITS ETF. But of course, there's always a counterparty risk, right? With the synthetic ETF. So this is something that you need to take note. Okay.
But of course, they in the fact sheet, they actually says that in the event of failure, they will have the collateral to pay back the investor. Right. But at the end, you are trusting the financial institution that give you the counterparty risk. Like I think in terms of the SPXS, right, I think the institutions are JP Morgan, Morgan Stanley, and Goldman Sachs.
Yeah, big names.
Yeah, yeah, definitely big names. But my take is, right, if you have seen through 08, 09, right, as much as they say there's this collateral over there, right, but you don't know when things start to fail, right, they will always save themselves first. Right? So you look through 08, 09, you go to history. So I think someone on, I think Reddit did I think a gain that you extra gain that get is about 0.4% gain, maybe plus every year, right? Just you have this counterparty risk. I think it's not worth it because you don't own the physical assets.
I think if you're going to accumulate like millions of dollars over your career, investing or like your DCA over a career for your S&P 500, you're going to get into maybe 7 figures, possibly, right? Or probably, and then you realize that all of that is synthetic. It's a little bit, some people, I wouldn't like it for myself. And the thing about is the collateral thing is a real thing. I mean, there's real assets that's backed by collateral. But the thing is, you need to do another layer of analysis to find out what is that collateral basket. You got to basically do another layer of analysis, find out what that is, what is the relationship with the counterparty, with the ETF issuer. It's a lot more work in that sense, and whether you're comfortable with that. Whereas with a physical one, you just know exactly I own these 500 stocks and that's it, which I think a lot of people prefer.
So I mean, you must really trust JP Morgan, Morgan Stanley, and Goldman Sachs. That's the most important thing.
But some people do. Looking at AUM, some people actually prefer going with synthetics. They are comfortable with the risk because it's cheaper. And I have no tax.
Correct. So I think we need to point this out. So because some people do really go to SPXS.
So thankfully, there's a new product that came out not too long ago. I think a couple of years back. You have the Spider S&P 500 UCITS ETF, right? SPYL, right? And this one, the fees is even lower. So you don't need to own the synthetic one. You have this, which is also physical replication, right? They own the ETF, they own the stocks in the ETF itself, right? So the fees comes in at about 0.03%. And within 2 years, they managed to accumulate 28 billion in AUM. Right? So we just, I think next year or 2 years later, few years later, I think this probably will grow a lot bigger, right? So I think there's a lot of potential for this to grow, right? And this thing has the same thing. They have accumulating in terms of policy, and pure physical replication, right? So again, they are still mimicking the S&P 500. So this is, I think, is really a good option, right? If you really want to get the best in terms of expense ratio that's actually coming at the lowest. AUM right now is still small. All right, give them enough time, I think they will scale. And of course, comparing CSPX, which I think I will shortlist CSPX versus SPYL, just these two because they are the lowest in the market, one of the lowest in the market. Okay, and CSPX because they have a big AUM, right? 3 figures billions. I think 3-digit billions. And if you were to compare these two, and then depending on the amounts that you're going to invest, let's say, all right, you start off with $10,000, right? And you're going to choose between CSPX and SPYL. Both are physical replication. The expense ratio that you're going to incur every year for CSPX, it will comes in at about $7 based on $10,000 investment, right? SPYL will have about $3. All these are embedded, right? You don't need to pay extra fee for this. It's embedded in the fund. You auto deduct from your return. So the saving is actually $4. Okay, so it's not much of a difference if you are investing $10,000, right? But if you were to go into like 1 million figures, right? Let's say if you have $1 million portfolio, you just want to invest in S&P 500 ETF, UCITS ETF, right? Then the fees will come in about CSPA will cost you $700 a year, right? SPYL will cost you about $300 a year. So the saving, you're technically talking about $400.
It's one good omakase a year, man.
So that's a saving that you're looking at if your investment quantums actually grow bigger, right? And of course, CSPX, the reason why we still shortlist as one of the top is because the AUM is big and the liquidity is a lot higher as compared to SPYL, right? So if you look at the average bid and ask spread for CSPX, I think you are looking at 0.02% average bid and spread. Okay, let's say you go to the market, you buy, the spread the market is asking actually is narrower, right? Which
because there are more buyers and sellers.
There are more buyers and sellers. So you will save money on that end, right? Versus SPYL, I think you're looking at 0.04%. Okay, so technically, if you have a $10,000 portfolio, again, it's not going to be significant. Right? You're looking at like CSPX will cost you $2 in terms of spread, and you don't see this spread cost when you buy it because it's not there. You're just buying off the market, right? You may incur it, but you don't know that it was there. Okay, so it's actually a lot more efficient to buy CSPX because the spread is narrower. Okay, but the saving is only like $2 if based on every $10,000, right? Versus if you have a $1 million portfolio, of course you're gonna have a spread of around $200 for CSPX, and then SPYL is about $400.
So knowing all of this, at the end of the day, which one would you still pick between the CSPX versus SPYL?
Yeah, I mean, I don't get the big inheritance. So if I do get a big inheritance, of course, then I would look at the bid and spread cost, right? But even then, if I take that into account, SPYL makes more sense.
It's still cheaper
over
overall,
long term.
right?
It's still cheaper overall, and you're looking at like yearly recurring fees, right, of 0.4 basis point.
Okay.
Right, which is, I mean, it's not that big. It's actually very cost efficient. Actually, even if you go for CSPX, SPYL, I think you still do both will do equally well. But given the choice, I would just go for SPYL. It's the cheapest.
Yeah.
Yeah, it's the most efficient, right? So of course, if you look at SPYL, they are listed in many exchanges, right? So I think the one that we're referring to is London Stock Exchange, and the one that I'll prefer in the USD.
Yeah. Because ETFs, the same ETF can have many different ticker symbols in different exchanges. Yeah. So we are referring to the one in London.
Yeah.
The Irish-domiciled one. One more question could be SPYL versus SPLG. Was it the one that was 0.02% in the US?
Yeah.
Which one will you still go for? SPYL.
SPYL
Because of the tax
efficiency.
Yeah.
But if I'm Americans, I'll go for SPLG.
Yeah. So it really depends on your tax residence. So for US investors, US ETFs make sense.
Yeah.
Foreign investors, Irish-domiciled ETFs make sense. Irish investors, US ETFs make more sense because there are taxes for Irish residents for Irish investments, which we're not going to cover here. But yeah, it really depends on your tax residence and which domicile makes most sense for you actually.
Yeah. So I think Victor just now pointed out a good question. I think if you're already like invested in CSPX, right, should you switch? Maybe you answer this question. Since you asked this question.
I think for me is I won't switch unless the sum is very big.
Okay.
Right. I mean, if it's a small sum, I just leave it and you just continue your dollar cost averaging in the new index.
So what you're saying is if you already like accumulated some funds in CSPX, you wouldn't sell it, you just leave it there.
I just leave it there.
Start accumulating the cheaper one.
Yeah. Right.
Unless it's a very big amount, then the savings to move it to a much cheaper ETF makes sense.
Correct.
Yeah.
But I think at the end of the day, when you hit your retirement, I don't think you want to keep switching. Right.
Yeah.
So it really depends on where are you in life.
Yeah.
Right? I mean, if you are still earlier in life and you still got a long way to compound, you can just switch for the extra return. But if you are close to you're at your retirement age, I think you should be enjoying your retirement.
So it means taking out the money and buying a car, is that what you're saying?
I mean, you should not be like spending your days switching. You should spending the days doing things that you like.
Yeah.
But of course, if you like switching, then that will be
Some retirees have a lot of times like maybe I should min-max my investments that way.
So it really depends on where are you in life.
Okay. So, but someone who's asking that, just you can just like keep your CSPX.
Yeah, if it's a small amount, if it's a big amount, just do the switch only.
Yeah, it's really up to you. It's really up to you. But yeah, I think we wanted to just kind of like summarize the most recent ETF products out there for the S&P 500. Which one's the cheapest one? Because the SPYL is very recent. It was only late
2023.
Late 2023, So not many people may know about it, and they've been doing CSPX for like the last 5-10 years. I don't know. And it's up to you whether you actually want to start accumulating a new, cheaper ETF.
And I believe moving forward, there will be even more cheaper
hopefully
S&P 500.
hopefully. You can just keep switching to the cheaper ones like that,
So if you're interested to like find out what are the best ETF, let's say for China or even like Europe or even like the world, or even some certain thematic ETF, I think we have launched a new course, right? ETF Dojo, right? We actually gone through the same process like what we've gone through in this video for S&P 500. We actually gone through, filter down the best ETF in that particular sector or a team or even that region, and then we screen out the best ETF that's most efficient for you to get exposure. Let's say if you're interested in that particular market, for example China, what is the best China ETF that you can get exposure? All right, so all this will be covered in the ETF Dojo. So just go to etfdojo.com. It's open until the 3rd of August. So like how we do our courses, it's open for like a limited time. This is open for only 2 weeks depending on when you're watching it. We are accepting enrollment until the 3rd of August, and you can get into the ETF Dojo, and we're going to teach you how you can basically value ETFs, which is a big thing. I think we got a lot of questions on this. All right. So how do you go about valuing ETF? When is the best time to buy? When is the best time to sell? So I think we kind of debunk everything on the ETF Dojo. Yeah. So this is the most important one. They're going to get away from ETF Dojo, how to value it.
I think valuation is really important. So, I mean, if you have a DCA strategy for like the S&P 500, you don't do valuation. But for particular thematic plays, maybe in semiconductors or AI, you may not want to jump onto the ETF straight away because the valuation is too expensive. But it's hard to get a valuation for an ETF. It's not out there. You got to do it yourself. So we teach you how to do valuation for yourself for your ETF that you pick. And then you can decide whether it's undervalued or not, and then whether you want to go in. So we teach you how to do that in ETF Dojo. I think that's really, really useful, especially for thematic plays. And we're going to share our watch list, our personal watch list for ETFs as well. And what we like. So you get that included in the course. All right. It's not just teaching you how to do it. You get our watch list for that. So if you're interested in all of that, just go to etfdojo.com, open until the 3rd of August. And we hope to see you on Insight. All right. So I think we wanted to cover S&P 500 today. And the cheapest ones. Anything else you want to share about this?
I think so far there hasn't been any course like teaching you how to invest in ETFs. So this is a product that I think we thought that, hey, I mean, if you guys are like looking into ETFs, right, you should be aware on how do you go about finding the best ETF. I think that also Adam actually broke down very good steps on how do you go about analyzing it. So I think you probably have seen how we go through the same process here, right? For S&P 500, we did the same thing with a lot of other markets as well in other sectors.
We actually do a lot more than what we share here. There's a lot more steps actually. This is quite truncated.
I think the thing about ETF is there's always new ETF coming. There's always so many ETF. I think it's like seems like thousands or more ETF, right? But the most important is to really just get the best one and the most cost efficient. That's the most important thing. So I think Rusmin and Adam has sniffed through and find the best already.
And we're still always going through more and more.
Because there's always new one coming like SPYL. Right?
So you always get the latest watch list that we like. Correct. The moment you join. etfdojo.com open until the 3rd of August. Do check it out if you're interested. And like I said, ETFs can form a part of your portfolio strategy. You can have like a portfolio allocation to ETFs and allocation for stock picking. And you can combine both, best of both worlds, I think. It's a very good way to invest. All right, so I think that's what all we want to share for this particular topic.
I hope to see you guys in the ETF Dojo.
Okay.
So get yourself educated, and then you will be more comfortable going into ETF market.
Okay. All right, so with that, my name is Adam.
Rusmin.
Victor.
Thank you.
Thanks for joining us. Any questions about these S&P 500 ETFs? We're happy to answer them. And of course, if you like this roundtable, please hit the like button and subscribe to our channel. Many more roundtables coming up, and we'll see you again.